Hello, everyone. Me, the Boss Hog. You're joining me today for the first installment of Grinds My Gears, a new series I'm going to be doing weekly where I basically just rant about something that grinds my gears, or more broadly speaking, annoys me in some way. I'm going to be doing these live, so we'll see how this goes. Now, I do have some notes to guide my rant, but otherwise, this is meant to just be a free speech rant of things that annoy me, ranging from the very irreverent to actually the quite serious. And I thought I'd start with ESG investing. So, for anyone who isn't familiar with the term, ESG stands for environmental, social, and governance. And more broadly speaking, I've read it and it's called doing well by doing good. So, to be clear, first of all, the intent here is that ESG investing should help us do financially well. And for anyone who thinks that this is a relatively niche thing of, hippies and well-meaning lefties, actually 1/4 of all investment by amount in the US is currently classed as ESG. So although ESG is in the minority, it's a pretty hefty minority. That percentage does range a little bit depending on exactly how you categorize ESG, which is one of the reasons why it grinds my gears. But again, I just kind of want to put that number out there because it is substantial. From my perspective, I want to start with a really clear reason why this annoys me so. And it's actually from Friedman here that I've got this quote. And that quote is, there is only one goal of businesses, and that is to increase profit. And ultimately for me, it annoys me when businesses start getting wrapped up in this kind of ESG stuff, because ultimately I almost don't care. Like as an investment, I want the business itself to be doing well. Now, that's not to say that good governance, potentially some good social engagement, some good environmental concerns isn't good business, right? It might be. But the thing is ESG is too much of a tick box exercise. And to be honest with you, the original intent of ESG investing was really about businesses risk managing, right? It's like if you were a super major oil producer, a risk for you is definitely global emissions and kind of the move away from fossil fuels. But that doesn't necessarily mean that you're ESG compliant just because of the fact that you're funneling lots of money into research for renewables, right? And that's kind of part of it. Like I'd expect any business to be considering ESG as part of its risk management. But actually I find ESG is primarily a complete distraction from profits. And I guess, that first of all really annoys me. I'm always a little bit dubious about businesses who kind of put their hand up and say, aren't I doing a good job? When actually, I can tell you if they're doing a good job or not based on the financials, right? The traditional measures. I guess moving on for me is the fact that ESG, although in theory it's, these three words, it's super duper fuzzy definitions. And just to show you how fuzzy they are, there are over 600 disclosure conditions globally that make up various considerations for ESG investing, right? It's ultimately so diluted and subjective that it's really difficult to actually use it in any kind of quantitative way. So the SEC quotes a level of subjectivity, which just sounds like a ridiculous understatement to me. But everything from sort of what is measured, what its weighting is, any kind of compromises and conflicts between the various letters. And actually a lot of the stuff, especially with the more social stuff, can be quite qualitative. So it's difficult to put data to non-structured data, right? It's like, how do you actually measure that? There are also some jurisdictional privacy concerns about sort of collating data, especially in Europe, tends to be quite data sensitive. And it just generally makes it a little bit useless almost to try and compare that data. I'd also add as well that companies who are kind of measuring this stuff, all too often they rely on voluntary disclosures rather than, facts that are audited, effectively meaning that companies who are saying that they're ESG may or may not be, right? So a lot of it's sort of commitments and then not enough follow through, or specifically not enough audited follow through. And I think it just allows a lot of companies to get away with greenwashing ultimately. And likewise, like the individual companies then get spun up into ETFs, which are then labeled as green investments when a lot of them aren't. And again, I mean, a lot of green funds came into for a lot of stick recently because it turned out that some of their larger holdings were in things like Shell and BP, which most people, I think, would claim are not ESG companies, right? That's not, I think, the intention of ESG, which is presumably meant to be investing in these kind of forward-looking, good for society kind of companies. Now, in fairness, to caveat that, I actually think that oil and gas particular is going to be around for a long time, right? But again, I think, and therefore, that is good for countries. It's very hard to function without oil and gas. But I think the intention behind ESG isn't to see very large positions in super majors as part of an ETF, right? The other one, I think, another concern for me is the fact that ESG kind of tricks people in a way to thinking that business is the best place to resolve what are quite wide and considerable challenges for society. And I think not only is our businesses not well placed, especially if you take mine and Friedman's viewpoint that ultimately their purpose is profit rather than societal benefit. Actually, evidence continues to suggest that with ESG, people are less likely to support government initiatives elsewhere. It's almost like because ESG, the companies are taking care of that. So I don't support my government doing stuff which actually incurs a cost to me, right? I can get it free elsewhere. Why am I interested in government policies to enable that? I thought it was really interesting because this is actually a behavior known as negative behavior spillover. And it's a bit like when somebody goes to the gym but then eats chocolate cake, right? Or takes part in public transport, but then will be really lax on their recycling. It's like by having ESG as a flag, and especially if you invest actively in those funds, it kind of allows you to think you're doing more good than you actually are. And likewise, it kind of encourages you not to really bother making the kind of costs and sacrifices that are genuinely required to really make major contributions into the ESG sphere. Next up, I kind of want to address the fact that with ESG, right, the whole purpose of it is it's about doing well by doing good. But to be honest, I can't really find good support or any data really, large scale, unbiased data that suggests ESG outperforms. Certainly in Europe, it doesn't seem to be the case. And although in America, there is a smidge of overperformance of ESG against non-ESG funds, actually a lot of the funds tend to have higher admin costs, basically, or management fees, with that. And, once you take them into account, it's basically much of a muchness. Now, especially when you consider the fact that a lot of these ESG companies have got very large positions in commodity players, it's like part of the reason why they've at least been able to keep up is only because of those commodity plays, right? Because the likes of BP and Shell have actually been doing quite well over the last year. So again, actually, if you were to look at the real ESG position, the performance would be worse, I suspect. Now, a lot of vested interests kind of try to fudge this by looking at assets under management. And they're like, well, actually, ESG funds have held up much better than non-ESG funds, right? Sometimes they're called brown funds, right? ESG is green, non-ESG is brown. But actually, the real reason for that is the fact that lots of money keeps being poured into ESG funds largely from institutions. So what you're basically seeing is, assets under management continue to go up or at least stay flat. But that isn't because of their outperformance relative to brown funds. It's because people just keep putting money into them. And it's like they're putting money into them just because it's like the hip thing to do. And we imagine, or maybe there is a real desire to be seen to be doing good, but actually it's not doing really anyone any good. And to me, if ESG genuinely was a legitimately superior investing strategy, it wouldn't need acronyms to pursue it, right? It would be like if ESG was so good for a company's bottom line that the market should basically dictate that investment should go there. It's like if you believe ESG is superior, you have to question whether you also believe that the market is this efficient beast, which is kind of what it's meant to be, right? The efficient market hypothesis. So either the market isn't efficient, in which case we've all got a problem, or ESG is actually not truly superior and requires lots of kind of fudging and everything else in order to make it appeal. And I just don't like it, to be honest. So I guess that said, I think there are some benefits to some of the stuff within ESG. And for me, I especially like investing in companies the kind of 1 billion to 10 billion market cap, where a lot of things like governance are only just really getting up and running. If I look at several of my holdings, the founder is still heavily involved in the business, right? He might be the chairman and the CEO, or he might have, a compliance job as well as an operational job. And it's like, actually moving a founder away is often a significant step within that, right? So introducing those governance steps is a good thing. And again, I'm expecting sort of PLCs, especially as they mature, to introduce things like risk registers, right? To understand what they're looking like. Certainly when you get audited, you have to have these things in place, right? So again, there is a reason to have this stuff. Likewise, I fully accept that humanity is at least contributing to global warming / climate change. And I think green initiatives are a good thing, especially when they're relatively easy to implement, different colored bins or recycling used water into toilet flushing, right? These are things that should be just put in place as standard. Put lights that turn out automatically when no one's around. Little things like that are good for the planet and actually good for business, right? Objectively, they save money. So that's a good thing. As long as, again, we don't allow either the business or people within the business or investors to kid themselves into think that just because they're contributing to a societal or environmental or governance gain here, that they can be lax elsewhere. The problem that I have is that, ESG is difficult to measure, super difficult to compare, and it's like very subjective. Like if we are to go with this, we need really like concrete and measurable specifics. So for me, the easiest one would be like environmental, right? Sod everything about water or waste or lights on and everything else, right? Look at your overall total emissions as a business, both in terms of gross and then any offsets, right? Ultimately, that should give you a single number that is your environmental impact, right? And that should be audited. That should be a third party, like, a kind of credit ratings agency, right? Which there's significant overlap, like 99 to 100% overlaps, incredibly close. There should be a bunch of auditors, maybe they're from the big four, maybe there's a few new businesses that come up and basically tick this stuff off, right? You're telling us you emit that much CO2, that much of this gas, this much this gas, right? And what your offsetting looks like. Okay, so your overall impact is here, right? That should be something that should be possible to do. And businesses that really believe in this stuff should be willing to kind of put in place the structures, the governance to support those kind of things, right? Likewise as well, when I think about social contributions, it's things like, do we pay the minimum wage? Hopefully you do. Do you pay the living wage? What tax rate do you pay, right? Are you paying full tax? And I don't mean, are you legally compliant? Because of course, all these companies are legally compliant. That's not the point, right? What's your tax rate? What's your avoidance of tax look like? What's the actual amount you've been paying in terms of your profit, your national insurance if you're in the UK, right? Your federal and state taxes if you're in the US, all of those kind of things, right? And then you can even move on to things like what's your charity contributions, right? Maybe if you're interested in kind of demographic splits, that stuff should be measurable, specific, auditable. All of those things are things that, could be signed off and compared, so that if you care deeply about what tax rate a company is paying, you can compare, this semiconductor pay charges 12% tax. This one is 20, right? Why is that? And is that a problem for me as an investor? Do I support the minimizing the tax bill, or do I want the tax a little bit higher and, legally the full amount without any adjustments? Because actually, I believe that that's a good use of that company's contribution to society, right? So I feel like if we're going to go down this route of caring, we need to introduce a lot more rigor to a process that feels like it's almost been devised by a marketing department, right? Like there's no way a bunch of auditors, compliance people in general really sat around and come up with the term ESG, right? I don't believe that at all, right? A bunch of salespeople, marketers, portfolio managers, you know the type, right? The people who want a buzzy sales word to get people excited about, right? I don't accept that anyone who is data driven and cares about compliance and rigor and the ability to compare different data sets really got involved in this at all. And I just think what that ultimately means is that ESG as a term should be scrapped. I think it's rubbish, right? Anyone who is ESG investing, I just don't think, I would struggle to imagine a serious investor only investing in ESG. And if they were investing in ESG, I would kind of expect them to accept that there are significant caveats, things like oil majors, within that ESG fund that is kind of facilitating it, right? And I guess that's probably all I have to say on the matter. I think ESG investing is not a terrible idea, just the term is poorly executed, deviantly marketed, impossible to realistically measure and compare. And it really, like, as I've gone on through this, it does grind my gears, and you can tell because I'm just starting to rant. So yeah, this is my first video. Like I say, we'll start with this. Hopefully you got something out of it. Let me know if you agree, disagree, whether you consider ESG investing. Personally, I don't in any of my investments at all. Yes, of course, I do think about the future. Yes, I care about some of the stuff within ESG because I expect it to contribute materially to a company's financials and the traditional things that we measure. And of course, I also care about the future, right? I've got a daughter that inspired me to start investing. I care about the future personally. So it's not like I don't care about this stuff. I just hate the term. It needs to be ditched, and we need to move to a much more rigorous and proper way of comparing environmental, social, and governance between companies so that we actually know where they stand on it. Thanks very much for watching, everyone. I've been the Boss Hog with episode 1 of Grind My Gears. Bye for now.